Welcome everybody. This is the Thursday evening Viper trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. Tonight is June 6th, 2019. We took a poll in the pre-webinar area there, and consensus is to look at crude oil and CUL or ES, the E-mini S&P futures, and CL crude oil futures first, and then we'll work our way into other instruments. Tonight's topic is making that right trade decision. So we're going to go ahead and knock out our standard disclaimer first before we can get over to charts. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Okay. I have a sip of coffee and wake up. My apologies, everybody. Okay. We're going to start with ES. On screen one. So let's, without further ado, get over to it. All right, so just a quick overview. Some of you are new. Some of you are visiting on a free trial. So I'm just going to take literally like just a minute or so to explain what you're looking at here. We are connected to a data feed to our broker, which is NinjaTrader. This is the a 4-range data feed of the E-mini S&P futures, ES. We're still in the June contract. I think within another week or two, a couple weeks, we're going to roll to the September contract. But for now, all the equities are still in the June contract. And we have our indicators. These are the Viper indicators that you are looking at. Generally speaking, when you have a red background, you are more or less in a downtrend. And of course, you're going to see a lot of red bars here, red, yellow, and occasionally a blue on a deep retrace. Conversely, when you're in an uptrend type move, the background is predominantly going to be green, and mostly blue bars, and you will see a stair-stepping up effect with higher highs and higher lows in an uptrend, of course. The ovals are the predictors. Those are real-time support and resistance levels. You can toggle them on with a button. Power meters, of course, are the 4 different trends on the chart at any given time. You can read those accordingly. And we are what you call retracement type traders. So what we do is in an overall very high level, and this is true of any market that we trade, crude, it doesn't matter, any market. When we say retracement, in order to have a retracement, of course, you have to have a trend. So we like to trade trends. There's really 2 things. You have a trend and you have a range. Let's put that right on here real quick. If you're really going to simplify the markets, any market, any financial market, you have what's called, this notion of a trend, and you have the lack of a trend, which is a range bound. It's a very basic level kind of understanding of how markets move. Trend, of course, is higher highs, higher lows in an uptrend. In fact, you can see 2 trends here. In the uptrend, of course, you have this notion of thrust, and you have what's called a pullback or retracement. And so when we say that we're pullback or retracement traders, that's what we're referring to, that we actually enter the trades on pullbacks and retracements. That's what that means. So as the trend continues up, you get another thrust, you get a retracement, you get a thrust, you get a retracement, etc., as long as the trend remains in place, right? Over here, of course, when you have a downtrend, you have price action going in the other direction, which is down. So the thrust then turns the background red. And then you get retracements of various sizes and types. You get the idea. I'm not going to do them all. You get the idea here, right? So thrust retracement, that is a trend. Now, when we talk about trade entries in a trend, this is where you get in, and I think this is where a lot of people, a lot of traders that we've seen over the years struggle. Even though you know, some of you may sort of intuitively know where to get in, and sometimes it's presents a challenge. And so, in the case of the downtrend, we ideally want to see a market come back to somewhere around what we call the midband. Oh, and I forgot to say, of course, the obvious most predominant indicator on the chart, of course, is the band and the midband. The midband and the bands. Midband, of course, is the large, thick line in the middle of the bands, and we have 8 total bands, 4 below and then 4 above. Sometimes, occasionally in the room for trade entry, you'll hear referred to line 2 and line 6. Line 2 is the red line above band 2. Line 6 is the green line above band 6. So line 2, midband, line 6. So when we say that we want to take mid-band trades, in the case of a downtrend, you may hear something to the effect of, I would enter on a kiss and roll short off of the mid-band. So when we say that, what we're referring to is the examples that you see right here. Let me just show a couple of them real quick here. Here's an example of what we call a kiss and roll. Can you see that the candle literally wicked the midband and rolled over? Likewise here. So I'm not getting into, at this point, actual trade entry. You know, you would use a region box and you'd be filled on the short on the close of this bar, close of this bar. Same thing over here. That's the trade entry itself. Right now I'm talking about positioning, simply understanding where to take the trades. So if a market comes into the band below the midband or above the midband, this is said to be a midband trade, and or of course candles directly on the midband itself. Now the opposite is true in an uptrend where you get pullbacks and a bounce. So you might hear something like, if the market pulls back to the midband and bounces, I will look to get long there. So in the case here, a couple examples of that would be right here. Here's an example of a pullback with a midband bounce. Here's another pullback with a midband bounce, and this is all long, thrust, background green, retracement, thrust, background green, retracement, all the way up. So very much like the short entry, you need to, or the price needs to come into the band above, immediately above or below the midband, or sitting directly on the midband itself, of course. And this is considered a midband trade. In the case of the long, we're looking to buy. In the case of the short, we are looking to sell. Sell or short, sell or short, sell or short. And here we're looking to get long, buy and get long. Now there are 2 other types of trades, and I'll quickly show them, and then we're going to get on to looking at what happened this morning. Okay, this is just a quick sort of 10-minute overview of, you know, 10,000 foot level of, you know, the indicators, how they work in the different trade entries. And then we're going to quickly zip into today and start looking at actual trades. Okay. In the case of a downtrend like we have here on the left, you have 2 other types of trades that may feature in the calls in the live room. One of them is what's called a minimum criteria entry, which would be a close above the stealth. Stealth is the sort of little red sneaky snake line in the case of the downtrend. So that would be coming up into this band right here above line 2. So technically that's 1, 2, 3, band 3, yes? This is called minimum criteria short entry. So you might hear that in the room. Okay, well, you know, it came up and it didn't quite get the midband, but you met a minimum criteria for a short. What that simply means is that in the case of that description, that the bars came up into here. And the reason we do that is that you can see that with a support level that is being formed in the case on ES right here, that you need sufficient retracement to get into the trade so that there's some meat on the bone to make money when the market moves in your favor, in this case down. So that's why we have minimum criteria here. We have mid-band entries here. Generally speaking, between the mid-band and the outermost band swing level is around 20 to 22 ticks. So even given some slippage on your fill, there's enough meat on the bone to get the trade. Now, in some cases, and we'll look at this in the downtrend, the bars may turn blue and go a little higher. They may go all the way up into this area right here and actually turn blue, the other color. And sometimes that's confusing to some traders, like, hey, wait a minute, they're blue. Why am I shorting it? This is called a deep retracement, a deep pullback, or a phantom. You might hear that in the room. That's a phantom trade. That simply means that the trend has not changed. The trend is still down, but it's gone much deeper in its retracement. Okay, now conversely, looking at the long side, is there any questions on this? I just described the three basic trade entry types on the short side of the market. Hold on 1 second, please. Stand by. Got to find my cursor here. Hold on a second. Sorry about that. Can everybody hear me okay? Testing audio again. 1, 2, 3. Had to take care of something there real quick. Audio still working good? Okay. Everybody hear me? Yes? Still see the yes chart? Yes? Good? Good to go? Okay, good. All right. Let's see. Where were we? Okay, yeah, okay. So I don't see any questions on the short side. So it's pretty straightforward. Minimum criteria entry into this area right here, this band. Mid-band, of course, is this area right here, and then the deep retracements are up here in the case of the short entry on the downtrend. Now, on an uptrend, the areas are the same, but they're flipped in the case of getting long trades. So we talked about mid-band entries here. Minimum criteria entry, of course, would be this band here. And you're not getting short, obviously, you're getting long, right? And a deep retracement or phantom, depending on the condition, in the case of the uptrend, would be down in this band right here. And in some cases, the bars might actually turn red. So that might be a little confusing. Now, these are all valid long trade entries on retracements into these areas right here. Now, I've said this before, and I will say it once before we proceed. We teach all of these trades. We show them on charts. We call them in the live room. We literally have traders that have been trading a long time with us scattered all over the world, literally dialing into our charts and learning and taking these trades with us. Now, that being said, do you need to take all these trades? Of course, the answer is no. Now, what is that a function of? It's a function of two things. Let's talk about that for a second. So we understand trend, we understand range, we understand trade entries. So I'm going to very quickly, briefly touch on this because there's some new folks in here, and I want to cover this. So what I'm saying is that we are going to teach and show and call all possible trade entry types. Yes? Now, when it comes to you individually, I'm speaking to all of you in here and anyone listening on this recording, is that your trade entry selection is going to be based on your comfort level with the trade type, right? And in many, many cases, the actual instrument that you are trading. Most of you know, of course, I'm using the Russell as an example, or trading. ES tends to move a little slower, like, sort of like molasses moving up and down a hill kind of thing, right? And so some people are more comfortable with that. It tends to respect mid-bands and lines and support and resistance. It doesn't move as fast as the other instruments. Some people like that. You can now trade MES. MES is the, and we'll talk about this more next week. MES is the micro, which is 1/10. So right now, each point on here is $50. 4 ticks per point. Each tick is worth $12.50. Now in the micros, it's 1/10 of that. So 1 tick on a micro MES is only $1.25. It's a good way to learn how to trade if you want to trade ES, but you don't want the big risk. So what I'm saying is, like, a 10 tick stop on a full contract and you hit it would be $125, right? And if you get a 10 tick stop on the micro, you only lose $12.50. So it's something you should really look into. You got to have the latest version of NinjaTrader 7, which is 40. And you got to reset your instruments, and then MES and M2K and all of those are going to show up. Now let's go ahead and fast forward to today. Now some days you get nice trends. You get trends at the open, you get trends into the close, you get trends in the middle of the day. Other days are more choppy. This speaks to the range issue. Now let me go reconstruct what happened on ES this morning, and then we'll go over to crude and look at some other instruments. I don't want to blow the whole session today on ES. So here's this morning on ES. I'm here in California. This is all Pacific time, so midnight Pacific was here. This is the end of the Asian session over here to the left, and this is the beginning of the European session. So, you know, big banks in London and what have you are no sound. Everybody, can everybody hear me? Richard says he doesn't have any sound. Chart moving back and forth. Audio check, visual. ES cursor moving. Audio check. Can everybody hear me okay? Mario hears me good? Yeah, it might be you, Richard. Of course, he can't hear me. Yeah, you might need to go out and come back in. If that ever happens, if you ever lose sound, I'm checking my mic. Everything's cool. Everybody's saying, yeah, the audio's good. So if that ever happens, by the way, you just log out and come right back in. You'll be good. Okay, moving on. So, all right, so we can clearly see that overnight that the trend was up on ES, right? Trend was up coming out of the Asian session into the European session. However, you came and you broke down through that. Now 6:30 Pacific, which is the open of the US market, is right in this area right here. So you can see that, let's see when 6:30 actually was. 6:30 was, yeah, right there. Literally like right there. Now you can see that with this thrust here, now there's a couple of different ways to look at this. Now, you know, with this thrust here, we turned the background red and we broke the support level, but you were right at the open. What can happen at opens of markets? Well, you can get trend changes. You can get algo spikes. You can get markets wildly fluctuating up and down. What we've said in the past is a lot of times, you really, you know, in fact, most mornings you want to wait, you know, 5 or 10 minutes to let the market sort out what it's going to do, because you can see here very quickly that you kissed and rolled off of here for a sort of a spastic pop down within the first couple of minutes of trading on ES. And then very quickly you spike back up. So if you had shorted here right at the open, it's quite possible that this thing kind of blammoed right up through you, and you really didn't have much of a chance to get long, because here you are and it's trying to bounce and it's sorting out which way it wants to go. So it really didn't sort out, I think, any kind of, and I wouldn't even really call it a trend. I'd call it sort of a slow grind, range bound under the midband grinder. If you remember, yes, that's kind of what that was. But that really didn't set up until somewhere about in here. I'd say after about 6:45. And the reason I'm saying that is because it became apparent here, and this is what I look at when I start to judge what I'm going to try to do. after the spike down and the spike up, what you noticed here is that there was repeated rejections of the midband in here. Each time it came up to try to rally, it got rejected and pushed back down. Now, granted, you were in a range. You were in a range. This wasn't very easy or nice to trade, and this took all the way until about 7:30. This thing just chopped up, chopped down, chopped up, chopped down. So you could have been scalping and shorting this, but it was a pretty choppy, sort of messy market to deal with, right? Anybody fight through the CS chop at all this morning? Anybody? Couple of you? Yeah, you did? Yeah, I did too. I didn't really make any money until this last bip down here, and then stopped out pretty quick. We put in that fresh low. If you recall, we were looking for 25. It blew through 25 and went to 23. Let me just show you how this happened here, reconstructing what happened. If you recall, we had a support level drawn. I believe it was right in here somewhere. I want to say it was like 25.50. Remember, it kept bouncing off of here, this level. We had that level in there, remember? And then we look back over here, back into the end of the Asian session, going into midnight, and we said that the other swing would be down around 22-ish. And sure enough, with that last little bip spike, we got down to 23.25. We didn't quite make it. And that quickly stopped out. So, they're really, for the first almost hour of trading in ES, there wasn't much to work with there. Okay? That's just, that's how ES rolls sometimes. Especially in the summer after Memorial Day, we're going to go in the sun. Now, all the markets aren't like that. Russell had some big moves. We're going to look at Russell. Russell moved all over the place. But ES was pretty choppy. Now, I'm going to advance this chart, and we're going to do a quick exercise together. You tell me when you think that the trend has changed and that you would take a long trade signified by typing in an L. I'm going to advance the chart, reconstructing the morning from 7:37 on. And when you think there's a trend change and a long trade set up, you type in the letter L. Are you ready to start? Okay, here we go. Okay, 7:33. Stopped out of the short. Everybody sees that. 7:38, 7:40. 7:52, coming up on 8 o'clock. 7:55. At 8 o'clock. It's 8:04. 8:05. 8:06. 8:07. 8:10. 8:30. Okay, let me go back. Now let me explain what's happening here. There's actually two things going on, and sometimes this confuses traders. And if you are confused about this, then you have to sort of stand down and trade only, as I said earlier, when the trade entry is clear and it's something that you're comfortable with. From a strict trend point of view, you could make the case. In fact, I think in the room we had a line up here that as long as this resistance line stayed intact, that you could make the case that this was simply a deep retracement or a phantom, however you want to classify it, in a deep retracement in a downtrend. See how it comes into this out, into line line 6, band 7, just above here. So technically, in the way we teach it, and I think Gary called it, I don't know if I called it, but you could have been taking shorts here. And when you look to short a deep retracement or a phantom, everybody knows what your target is, right? Your target's the mid-band, right? You want to go from here, and you want to try, your goal is to get to here. Now, that, showing this and explaining it, you might say, well, the bars are blue and it took out the mid-band, and, that could be a trend change. In some cases, it can be. Now, for it to be a trend change, what needs to happen? It needs to get a what? A higher low, right? It would need to get a higher low. It would need to hold some higher level than down here, yes? Where might that level want to be? Well, it might want to be somewhere in here. If you get a higher low and then bounce and take out the swing, wouldn't that be a trend change? And you could now be looking to get long. So this, what I'm saying, to be clear, many, many times, turns out to be what's called a transitional area. Transitional in the fact that this could simply be a deep retracement. You could get trend continuation and the market could continue down. Right? That's what that whole deep retracement thing's all about, right? On the other hand, if we come and we find a higher low, which it did right here, you could be looking to now get long. Which, of course, you see it bounced and it took out that swing and it turned out to be a very nice long trade. All right. So I don't see any questions on that. Let's move on. Let's go ahead and get crude up. Where's the crudy? Crudy's still on July, all right. Let's see. Crude has not flipped. I know gold flipped. Anybody trade gold in here, by the way? Just quick show of hands. Anybody at all trade gold at all? You interested in gold or trade it or you even look at it? I mean, other than the room, any gold traders? Show of hands. A couple. Hardy does. Okay, stand by. Crude's loading. Yeah, crude is still on July. Wow, only one person trades gold. Huh, interesting. A lot of crude traders, though. So let's go back and look at the open of the crude market here. Okay, I want to reconstruct the crude market from the morning. Gary opened the room at 5:55 Pacific, so that actually would have been right here. We're right about there. I was not in the room at the time. Maybe some of you can help me, but did he box this in? Did you guys catch this short? Anybody? Was anybody there? I don't come in until about 6:15, 6:20, so I catch the equity market open. I don't catch the crude pit open. Anybody know if he caught this short? This would have been right as he was opening the room up. I mean, literally right as he was 5:55. He's opening the room right here in this box set up. Anybody remember where they took that? Oh, he got in after the mid-band kiss? Yeah, see, now that would make sense. See what Toby's saying? So you get this ABC pattern a lot of times, and this is a really important pattern to learn and put into your sort of quiver of tools of trading. What we're saying is the ABC pattern is, you can see here, broke the box, put in a fresh swing below the midband and below here, and then you came back up, kissed the midband, and then rolled over right here as the crude pit was opening. Kiss and roll, and then that turned out to be a beautiful short right there. First like 15 minutes of crude pit open. Yeah, we're gonna do that, Maurizio. I'll try to do that tonight. I don't know if I'm gonna be able to do it tonight. Let's ask Gary in the morning. But to answer your question, here's Maurizio's question. This is a good question. For the micros on the E-minis, if you're looking to trade the micros on ES, it is MES is the ticker symbol. They are available in Ninja 8 by default. So if you're running NinjaTrader 8 and you pull up an instrument manager, here, let me see if I can. Let me just quickly pause to show this because there's a couple of questions coming in regarding this. Let me explain what's going on here, okay? And then we can quickly move on because there's a lot of interest in these micro mini deals, and I can understand that. So let's just take care of that right now. All right, let's go back over here. Here's how I'm going to do it. Here's how I'm going to do this. Okay, I'm going to start with 7. Okay, on 7 on the left, your control center looks like this. You want to go and you look for MES or M2K. MES is the micro E-mini S&P contract. You can notice in here that it's not in here. See how it's not here? M2K is not in here either. You have to have the 40 version. And you have to reset your instruments. Everybody knows how to do that. Anybody not know how to do that? If you don't, I can show you. You have to reset your instruments. Now in 8, if you have the latest version of 8 installed, it will be in there by default. You don't have to do anything. You don't have to change anything. It's already in there. Let me see if I can show that real quick here. Let me see if I can find it. Where is it? They really mess with this instrument panel, didn't they? Oh, Lord help me. It's driving me nuts. Here it is. Oh, okay, Kathy. Okay, well, I'll just do this real quick and then I'll wrap it up. Gary, in his Monday video, Gary went through all this, but I'll just quickly show you. In 8, you want to pull up your instrument manager, and then in 8, by default, you'll have MES. It will be in there, and you can just load it on your chart. Okay, and remind us in the morning when we're in the live room. Let's try to get a couple of these charts up before we close. We'll pull up the micro ES and we'll pull up the micro Russell. It'll look just like the ES and Russell charts, and then you can get a sense. And next week, actually next Thursday and Saturday, I have my whole webinars will be devoted to trading micros. Next Thursday and next Saturday. Okay, next Thursday and next Saturday. Does it make sense to draw weekly, daily, and hour support resistance lines on a chart and take trades with confluence? Yes, Dennis. A lot of times you're going to want to put one thing if you can, if you have the time before you start trading in the morning, put your high-low close on oil and your other instruments right on your charts. And a lot of times the markets will go right to those. Yes. So the answer is yes. Now, going back here to crude this morning, after you had this big thrust down, if you caught this short and you put a couple contracts on it, you were probably set for the morning right there. That was just a beautiful short trade. But then she started to get a little funky. You can make the case here that this is a deep retracement short. Again, right? So we have mid-band, we have minimum criteria, we have mid-band, and we have deep retracement. This was a deep retracement. I think Gary probably called this out. And it actually made some money down here. And then you kind of went into this sideways little bit of jig here on crude because support held down here at 51.45. And then you went pretty much in a range with the resistance level being up in this 80, 85 area right here. Everybody see that? You can enter when it's sideways. So this is OM. This is a case where let's just go ahead and extend this out. clearly you can see that in here you have a tighter range, and this is the transitional area I was telling you about, is that when you short deep retracements, in the case here and in the case here, if you'd taken shorts in deep retracements, your initial goal is your mid-band. In this case here, you obviously hit the mid-band, and then it went and checked the lows of the morning and bounced right there, right? Come back up to resistance, kiss and roll, and you also got your mid-band on the short right here. Now, subsequent to this, when we got to about 645, you should make note of the fact, and I think we said this in the room, when I start to say that the transitional area occurs, in the case of a downtrend, your transitional area will be this area right here. Why do I say that's transitional? Why would I say that this sideways sort of choppy area is a transitional area? What does that mean? Anybody have an idea what that means? Transitional. Is it, changing something? Is something different in here? Is there something we need to be aware of or take into account? Yeah, it's sideways. Yeah, it's sideways. It's sideways. So, but in addition to being sideways, what I'm saying is that in the case of the 645 to 705, there's about 20 minutes in here, that you put in a series of higher lows. In other words, your range did not extend back down to here, did it? No. However, you were not putting in higher highs until this breakout right here, right? So these can be a little bit difficult to trade. On one hand, you could say, well, you should be shorting the top because technically you're still sort of sideways to down. However, you could also make the case, well, you're finding support just under the midband here, and you could be buying this, right? Now, here again, I want to harken back to what I said earlier. If you find these types of conditions in markets confusing, you simply need to stand down and not trade them. Or what you can do is go into sim and practice in here, either taking longs and taking profit at the top, or shorting the top and taking profit down here. And you got to realize that if you're going to trade both ways, that once it breaks either direction, you could take a loss. For instance, if you were shorting right here, looking to get back to the midband or even to here, or maybe trend continuation down to here, then obviously this last trade turned out to be a stop out. Unless you had a super tight stop right there. And maybe you weren't even filled if you use a region box. So that's what we need to realize. Okay, this is what we got to take into account. Markets go up. That's a trend up, right? Markets go down. It's a downtrend, obviously. And then markets go sideways. And when markets are sideways and range bound, I would strongly urge you to test the waters and try trading them in sim. And if you develop a knack and a skill for it, go ahead and trade them with real money. And if you find that you're, with all due respect, your keister's getting kicked all over the place in a range, then you know what? Maybe ranges aren't, range bound trading might not be for you. I'm going to pull up the Russell. Stand by. By the way, I see some people came in late and some people are leaving early. That's okay. This will be I am recording this, and we'll have it up on the web tomorrow morning after the room closes. Hold on, I'm loading up a Russell chart. Stand by, please. Show of hands, anybody trade the Russell? RTY, Roosty Bird? Truth be told, I don't really trade it that much, but I see some of you do. Okay. But I'll tell you what, this morning when ES was so choppy, I went and turned to Russell, and Russell had some phenomenal moves right out of the gate there. Remember the shorts we took on the morning, everybody? Let's reconstruct the Russell shorts here real quick. And here again, I want to help everybody get get an understanding of how to handle the open, because the open of markets and the equities can mean some. How many of you get sort of whack-a-mole at the open? Anybody? You get in, you get out, you get upside down. Next thing you know, it's 7 o'clock and you're in the hole trying to dig out of it. Anybody? I do. Yes, that's me. Well, here's another example. Quite some of you, not everybody, but a few of you are saying that's me. So here's another case, and this is very similar to how ES looked, right? You could make the case that coming into the open here that the trend was down on Russell. So, you were looking to short here. Which actually gave you a trade. I mean, this actually did give you a trade here. This was a decent short, depending on where you got filled. And then you had a mid band. I don't know if that, I don't know if you got filled there or not, depending on how you drew the box. And then at the time that this happened, right around 632, 635, it started to look like Russell wanted to go up until it got this sort of little jiggy jog here. And then sure enough, at 641, 642, she rips it all the way down through support, turns the background red. Now, the actual trade entries didn't set up, and I think Gary had a line. I want to say there was a line in the room somewhere up in this area right here. I want to say it was up near 07, 0690 or something. Anybody remember? This was your short trade entries right here. Right here. Right there and right there. Now, you might say, well, when did they come along? Well, let's take a look. This one set up at 646-ish, 647, and this one set up at 650. So, I mean, aside from this poke down and this poke up that maybe you didn't get, and the jiggy jog around in the middle here and for 638 to 642, the trend direction became clear when this thrust occurred down right here, that the trend was down and you were looking to take shorts. Some of you have typed in that I get upside down at the market opens all the time. So how do we fix that? Any ideas? I used to happen to me all the time. I used to come in, some of you know this story. I used to go into, I used to get up to crack of dawn before the sun was even up, fight an insane amount of traffic up over the Bay Bridge, get into a trading floor in San Francisco, get up and on there, get the coffee, get everything all teed up, computer all set. This is a long time ago. Guys, it's probably 15 years ago, maybe 20. Anyway, yeah. All excited, market would open, gap up, gap down. I was trading stocks at the time. Get long, get stopped out, get short, get stopped out. Next thing you know, it's 6:45, 7 o'clock, and I am in the hole every single morning, in the hole, digging out of a horrible hole every morning. So how do you stop doing that? Stand down and don't trade it. That's right, Hardy. You have to stand down. You have to simply sit on your hands between here and here. Right there. I know it's hard. I know it's hard. Look, this thing's going up, it's going down, and you're going to say to yourself, well, I can't sit on my hands for 15 minutes. What are you talking about? I'm going to miss the big move. If I don't get in and take the first trade of the morning right around the open, I'm going to miss the big move. It's going to go 100 ticks. It's never going to retrace. It's going to run without me, and I'm going to be stuck holding the bag. How often does that really happen? Statistically speaking, how often does that actually really happen? Any ideas? What? No, I'm saying how often does the market go and break right at the open and run 100 ticks and never retrace at all? And that's the big move. That's the only big move of the day. Right in here. This first 15 minutes, how often in the first 15 minutes is the huge move of the day, and it never retraces, and you never get a chance to get in, and you miss the whole big move of the day in the first 15 minutes right here. This area right here. This is what I'm talking about right here. This area. If you don't take that. Almost never. Almost never. I mean, statistically, I would put it under 5%. I mean, there is an occasional case where, you know, maybe there's an anomaly of one, and it might be related to some Twitter thing that came out on a tariff right at near the open, and the market's just ripped down 100 ticks, and they just never retrace, and you never had a chance to get in. So let me make my point. You waited until 646, 648, 648, 649, whatever, and you caught one or either of these little kiss and rolls short. Now look at this move. The move went all the way from here, and I took this. I had a 4 lot on all the way down. Anybody in the room remembers that? All the way down, and I stopped out right there. As I recall, I peeled, when it was double bottoming, I peeled 2, and then the other 2 came off here. But that's only part of the question. So what I'm trying to illustrate here is that the big move actually occurred outside of this zone right here. You actually didn't miss anything by staying out of here, other than a lot of heartache and chop and losses. Other than these 2 kiss and rolls, were there other places to get short on the Russell after this initial entry here, and how many were there? I'll give you 10 seconds. Were there other short entries on the Russell after the initial entry here at 649 that you could have gotten short on a retracement to get some of this move? The answer is yes. And so you have 9 seconds left to just put in a number. How many? How many retracements allowed you to participate in the short? Five seconds. Counting retracement short. 4. You should be able to see them right on the chart. How many are there? 3. Cast your vote. 2. 1. Time's up. Well, let me do the easy ones first. Obviously, that's a mid-band short right there. I think we called it in the room. That's a mid-band short right there. We called in the room. That's a mid-band short right here. We called in the room. Here's several mid-band shorts, kisses and rolls off of 0120 we called live in the room with a line there. Both Gary and I did. Here's a couple of minimum criteria short rollovers. There's one right here. There's another one right here. You had another one down here where it kissed and rolled off of 96. I remember calling this live ahead of time when the market was down here. It needs to stay under 96. Does anybody remember that number? We called it out. I was in it. Went down and double bottomed. As it was going down, I said, watch for a double bottom. Anybody remember that? It was up here, and I said, watch for a double bottom. Sure enough, it went down and got what? Double bottom. Came back up, took out 96, and we were out of the trade. Counting entries. 1, 2, 3, 4, 5, 6, 7, 8. Now, those 8 re-entry short on retracements, legitimate, minimum criteria, and mid-band kiss and roll short entries are in addition to the 2 that's set up here for a total of 10, count them, 10 entries short. And you started to run at 07, and it didn't end until all the way down here, almost at 93. How many ticks is that? Anybody? A 140 ticks. This is a 140 tick drop with 10 possible trade entries. And you didn't even do anything in the first like 15, 20 minutes. You didn't do anything in this box. Nothing. You did nothing. You did absolutely nothing in here. So you weren't in the hole. You weren't in the hole when these trades set up. So I think it's a fallacy to really believe that if you don't get into this for something that happens in the first 5, 10, 15 minutes of trading, and the market's going to just have the total run of the day, and you're never going to have a chance to get in with a retracement, it's just a total fallacy. It happens every day, all day long. Now, here's a bigger question. Was this the only big move of the day? Were there other big moves that happened even after this that you could have made good money at? Let's look. Because a few of you typed in, well, you got to go in the first 15 minutes or you miss the big run of the day. Well, first of all, we just proved that's not true with this alone. But let's go past this. Here's some more moves right here. I'm guessing that's 1500 down here. This is 80 ticks right here. There's 80. Here's another short. Here's some chop. Here we're going into 10 o'clock. Market's starting to rebound. Here's a bounce here where it came out of some chop from 93, went all the way back to 02. This is 90 ticks. That doesn't look like much. That's a 90 tick move. 11 till about 11:30. And here's another decent one right here from 14.99 to 15.09 going into the close. This was a 100 tick move right there. Couple of retracements. Here was a minimum criteria retracement here. You could have caught at least the second half of it. Here's another short. That's probably 60 ticks. Here's a sell-off into the close right here. Went from 06 all the way back down to 98. This is 80 ticks. So I guess was there other moves that happened after the first 15 minutes of trading? Yeah, a lot of them. Okay, the bottom line is this. I'm not trying to be a cocky and I'm not trying to be a jerk. Okay, let me just say it this way. Okay, you really want to stay out of here. Okay, and if you do want to fight your way through this area, if you think there's a good move set up, if it meets your criteria, if there's a good mid-band and you're in a trend and you want to do a short or long or whatever, just keep a tight stop and don't let it get you all whack-a-mole before 7 o'clock. That's all I'm saying. All right, let's take a look at gold and then we'll wrap. There was a couple of folks that trade gold in here. Just sit on your hands. I mean, one way you can force yourself to do that is check off that global sim box. Everybody know how to do that? And then at 7 o'clock or 6:45, you uncheck it. And maybe you don't want to do that, but I'm just saying, I'm just lobbing it out there for you. That's one solution. Then you don't have a choice. Whatever you click on is going to be in sim. Right? All right, gold's loading up. Give me a second here. What do you think about gold today? Here's gold. What do you think about this chart? Let me get you oriented right here real quick here. So it looks like 6:30 is over here. Here's the first 15 minutes on gold. It'd be from there to right about there. I mean, you know, I suppose you could say that there was a short here. Yes, there was. I don't remember if we called this or not. I think we might have. I think Gary had a box here. Yeah, so you did actually get a short. It didn't make a lot of money, but it did, you know, depending on where you got stopped out, you got a little scalpy out of it. And then it got pretty choppy. You know, you went up and you had a mid-band pullback and you had a long here, right about when we were closing the room at 8 o'clock, you had another long on a retracement here. This is a mid-band long on gold right in here. All right, pop quiz before we wrap. If you were going to short gold now after hours, where might you look to do it? 10 seconds on the clock, and then we're going to wrap. Background is red. Swing levels have been taken out. Bars are predominantly red. The band and all the mid-band and all the bands are stair-stepping down. We're clearly in a downtrend, right? So we're looking for shorts. We just put in a fresh swing low. We know we don't short thrusts or buy thrusts. We wait for retracements. If gold was going to retrace to where might we look to get short? We'll give you another 8 seconds if you were trading gold after hours. And you could do this in sim. I don't know that slippage is probably pretty high, but just put in a fresh swing down here at 36.40. So we're retracement pullback traders, right? So if it pulls back to where might we look to get short? 4 seconds left on the clock. What are you going to do? You gold shorties. 2 seconds. Cast your vote. Short entry. Okay, time's up. A lot of you typed in the mid-band. Okay, that's good. Now, it's healthy to think of the mid-band as an area. This is what I would like to close on if I can, okay? I mean, I think it's okay to simply say when somebody says, well, where would you look to get short, and just type in the mid-band. I'm not saying that's a cop-out, that you haven't really thought it through. You just say, well, it hits the mid-band, I'll get short. But the fact of the matter is, sometimes it hits the mid-band, sometimes it doesn't, sometimes it goes through it. Here's some examples right here. Let's look at them. Here's a case where it went through it, right? Here's a case where it didn't quite get it. Here's another case where it went through it. So if you say, when you said I would get short at the mid-band, if what in fact you are saying is I'm looking at an area around the mid-band for a kiss and roll short, now that's a healthy way to look at it, which would sort of be this area right here. I mean, technically the mid-band is at 38.80, but it could go as high as 39.50, and it might only get to 38.50, right? So actually, your area to get short, the correct answer I was sort of looking for was this area right here. If the gold came up into this area right here and rolled over, that's the critical part, right? We can't just say, oh, it came up into here. That's really not sufficient. It's got to get at least up into band 2, above line 2. Yeah, so, the sweet spot's kind of right up in here. So this is what I'd like to close with, and if you can just sort of keep this tucked in the back of your subconscious as you're looking at these charts and thinking about, contemplating your trade entries, this is a really healthy way to look at it. So when you think about mid-band trade entries, it is healthy. Let's just put this in here so we all sort of get on the on the same page here. Okay, so it's healthy to think of the mid-band as an area, not just a number. Right? I mean, we say mid-band in the room, and for simplicity's sake, it's a lot more complicated in the heat of the battle in real-time trading when the market's going up and down, shooting all over the place, and say, well, it's an area bounded by resistance at 39.50 and the support at 38.50 plus or minus 2 ticks, where it comes and enter and kiss and roll and get short up in here. It's much easier to just say, if it gets up anywhere around the mid-band, I'm going to short that. But in actuality, we're really, just to be clear about it, we're talking about an area around the mid-band. Because we don't know how far it's going to go. Could go up into here, could go to right here, could kiss the mid-band and roll, could come just under it. So what will help you in the future as you conceptualize how to see and take these trades, just realize that this is an actual area that you're looking to do. And the second thing is that there is a follow through to the trade entry. What do we mean by that? So there's always a caveat. We don't ever, you shouldn't hardly ever hear the comment, if it hits the mid band, I'm going to short that. No. Okay. Obviously, that's not what we're saying. What we're saying is there's normally a caveat. So we would say on a retracement of gold up into the mid band area, I would look to get short on a rollover up there. So what that implies and what that actually means is that the market has to come up into here somewhere and then actually roll over and go back down for trend continuation on the short entry. By virtue of the fact that it enters the area, it's in and of itself does not warrant the trade. Because there are cases, of course, and you see this every day, even in the live room, right, where you could get a trade tracement and blammo, it comes right through it and never kisses and rolls. So technically speaking, it came into the area, right? It did come into the area, but it went right through it. It never rolled over. So the second caveat is, in the case of the long, right, over here, here's an example, right? It comes into the area, bounded by the midband, and bounces for a long trade. So the critical other part is the bouncing part. So if you can just sort of remember those two things, that's a really simple thing that I think is going to help with your trade entry. Think of the midband as an area, and remember that there's got to be follow through in your trade entry direction, whether it's short, kiss and roll, or bounce long. Okay? Simple little thing to keep in mind. All right, I'm going to go ahead and stop the recorder. Any questions?